Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. Well, uncertain times, gold going down, stock market going up, dollar going up. What's it all about? Well, when you're not sure, we go to Gordon T. Long, who definitely knows what the score is. Gordon, welcome back.
Thank you very much, Kerry. Always enjoy our conversations. Always find them great interchange.
Yeah, definitely.
And the answer to your question, flows.
Yeah.
What's going on? It's about flows, liquidity, credit, moving to debt. It's not about fundamentals. They're breaking down. It's not about technical analysis. They're breaking down. We do a lot of work here in my shop, and things that have been standard, Fibonacci trades gone, Elliott wave, they're not working anymore. Not even close. But what works? Just track the POMOs and the money coming into the market and liquidity. Track it against Federal Reserve balance sheet, and you can just see it. You could absolutely. Now the question though, Kerry, is okay if it's that straightforward. How do you make some money at it?
Good
and your
question.
ability, and so what happens? And we've had to really shift dramatically our thinking here over the last 4.5-5 months to try and get better handles on what is actually controlling the market. And so therefore we've had to get to the extent of knowing where it's just not a matter of how the central banks are printing the money, but how the liquidity they're pushing out in horrendous amounts, how it's going to credit, and then how that credit is being translated into debt. Because in the middle of this credit is not M1, M2, M3, MZM, they're meaningless today. Forget them. Throw them out the window, burn those old economic books. It's the shadow banking system that you have to understand, $72 trillion of assets, and how they're creating the credit. I'm not talking, when I say shadow bank, this is anything devious. It's just that it's not reported properly. So you don't understand how they're doing the creation of credit. And when we had the mortgage implosion in 2007, 2008, we learned about, remember this, collateralized debt obligations, CMOs, collateralized mortgage obligations, and then we learned about credit default swaps, right? Well, you're going to learn in the future about collateralized loan obligations, collateral transformations, rehypothecation, and reverse repos. There's a whole list of new techniques where we're really taking debt and making it an asset. We all understand the story of securitization, but we flipped accounting around, I guess is one of the things I would say here, Kerry, where, we used to have what was an asset and what's a liability, and debt was a liability. Well, now debt's an asset. And that's if you have it on the books, because as a contingent liability, you can keep it off the books. So all of a sudden, when you start to get into that just basic shift of accounting, the games that you can play are phenomenal. And then you can start to pyramid debt without any kind of restriction when you can start to use it as I'll use the word, a marginal item. So it's about flows. I didn't mean to go on, Kerry, but
that's all right.
This is what listeners have just got to get tuned into right now, or they're going to miss one of the greatest opportunities we've ever seen.
Well, I just think of all this, and then I think of it going critical, like a ounce of plutonium getting hit with a immovable force with a hollow core, and all of a sudden you have an implosion, and then you have a mass explosion, and then everything in its path is gone. And that's what's going to happen to the financial system from all this games, from all of this gamesmanship that's going on, isn't it?
We're going critical. That's exactly the right way to look at it. And, I'm predicting that we'll see, I'll use the word, a melt up, a von Mises crack up boom that's already beginning. And it's very evident, for example, right now and then that'll lead to a complete readjustment of the misallocation of capital, mispricing, and malinvestment. And that clearing mechanism is healthy. It needs to happen so investment will start again. But we're seeing a mirror image of what's in front of us going on in Venezuela right now. their stock market's up, 420%, is going through the roof. Now, why is it? The economy is a disaster. They've just given dictatorial powers to the government. The army supervising, giving retail stores because they're having to put in fair pricing. I think I just read the other day they're going to give everybody in the country a $250 Samsung electronic item. This is to keep peace. Now, why would the stock market go up? Well, it's because the currency's pegged to the dollar. Well, that doesn't make any sense. But there's no way you can get your money out of the country. They have capital control. So if you're sitting in the country, what would you do with your money to try and protect the value? Well, the only thing left to you is put it into the market, which have assets, have some sort of value, and that's where it's flooding to. And in some ways, as these emerging countries around the world who are in serious problems right now and are going to get worse because of their current account balances, that money is going to start flowing to what they think are safe havens. And I'm anticipating you're going to see that flowing into the U.S. stock market.
And you know what? You were in total alignment with Martin Armstrong. He predicted that last month, he said around October, the Dow would crack 16,000. So give the guy his credit. He was a couple weeks late. Well, he's a couple weeks early in his prediction. But he's saying 32,000 by 2015. And if this turmoil really gets unleashed in the world's currency markets, and the euro takes some more hits, and the yen is really weakening now. You look, it's at 100 to the dollar.
It's only beginning to weaken, Kerry.
Yeah, it's only beginning.
I like the charts. The charts on it look like this is just a consolidation before we have another major down in the value.
Yeah, and look at what's happening with Bitcoin. Now, you could say Bitcoin, meaningless market, tiny, it's worth $1 billion, but it broke $1,000, and to me, it's emblematic. Okay, it's definitely subject to manipulation. You and I could have fun manipulating Bitcoin in an afternoon. We could make it go up, and you could totally blow it away. But the point is, it's people out there looking for options. And when enough people really get scared, they will run to the biggest so-called safe haven out there, and they won't run to treasury bonds. They will run to the U.S. stock market. At least that's what I see the upcoming meme in the world finance.
That's the hole we're coming out of, too. Exactly. We're the least ugly at the party, and it'll flood the last currency to collapse of the fiat currencies, and they will collapse at some point. We'll debate all along how long we can keep kicking the can down the road, but the last currency will be the U.S. dollar. So the flight to the perceived safety. And it won't be bonds. It'll be into the we say the U.S. stock market. Well, we need to think of it as global assets that have cash flows and dividends. So the major corporations they're operating around the world that are listed on our stock exchange. So it's not a vote of confidence to the U.S. It's a vote of confidence in those assets. That's real brick and mortar, real cash flow that's coming out, and because it's denominated in U.S. dollars and traded. It'll flow there. Now, if those, and we have the biggest army in the world too. That's another very important element here too of safety. As J.P. Morgan said about investing in South America, I'm not worried about it. That's why I've got the army.
A little cynical, but true.
No, but it brings the point home. When fear starts to increase, and it is increasing, that's where the flight will be. I differ with Marty, if that's his views on the timing. I think the blow up will happen, yes, but I think it won't last as long, and it'll happen very, very quickly. I've studied close to 52 examples of hyperinflation, which are hyperinflation is a currency event. It's not what we think of as inflation. It's because the currencies are plummeting, and in every case, when you go through it, Kerry, they're very quick and they're often very short, measured in weeks, some days, some months. Very few ever go on 14, 15 months. So when it takes a long time, but when it starts, it's like somebody yelling fire in a theater. Suddenly everybody's scrambling. So I think that because we're printing more money, if I use that expression, in a coordinated fashion around the world in this banking cartel of the four currencies that you basically have to trade in around the world, the sterling, the euro, the dollar, and the Japan, and they're all being debased at a level that is coordinated. So there's no place to run. But at some point, that's going to break down. And I noticed just yesterday that they're now going to start selling in Shanghai oil futures, not denominated in U.S. dollars, but in yuan. And so that starts to talk about how many dollars are needed out there. And then that starts to shake the currency reserve element of the petrodollar.
Yeah, and once that happens, boy, it's all over. Well,
you start to, you start to have the fear protection, and it starts to run. So I think that the world is becoming more attuned to the things we're talking about now. If we were talking about this 6 months, a year ago, people would say, oh, okay. But now more and more people say the markets don't make any sense. How am I going to protect myself? I got beat up in in 2000 with the dot-com. I got beat up in 2008. I sense another bubble. What am I going to do about it? Whereas before we kind of all got blindsided, if you would.
Yeah,
and
absolutely.
So there's and that's why they flooded into the bond market, the fear. So people are really grappling with solutions, and we've seen that in the gold trade, or have seen it. I know it's recently down. I believe we haven't even begun to see the movements that will happen in gold later in 2014, but that's another story.
Yeah, so just hold tight on gold, huh?
Personally, we think our analysis says it's more about time. It needs a little bit more time here on the Fibonacci's. A little bit, probably they're going to drive this thing one more kick down to put a little bit more fear in it, and then we'll start to lift, and fairly significantly. We actually believe the big move's going to be in silver, personally.
Yeah, that's pretty much what everybody's saying. And hey, they got it down under $20. Now it's back over 20.
Yeah, exactly.
Up 1%. I mean, there is a resistance point where you can't drive it down any lower. But let's talk more about that up next on the FinancialSurvivalNetwork.com, 1230 WBZT.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
We're back with Gordon T. Long on the FinancialSurvivalNetwork.com. I'm Kerry Lutz, 1230 WBZT. Gordon, want to find out more. What's your website, by the way, just so we know where to find you?
Yeah, well, actually, we have three sites, Kerry, specializing in different areas. GordonTLong.com, where we focus on macroeconomics and large views of indicators and analytics, technical analysis. Have another site, Triggers.ca, which focuses for traders in a timing with charts. But from one of the most popular right now, we have a financial channel at YouTube, Gordon T. Long, where we've done, I think, close to 150 shows now. Interesting, Kerry, a lot of the same people you talk to, a different format in terms that we really are, it's not an interview where we're really talking about with slides, certain elements of things we're talking about here today, flows and liquidity and that sort of thing.
Yeah, well, I find the whole concept of flows fascinating because it's not always something that's easy to put your hand on, and you really do have to dig, and really you got to do some work because, these hedge funds, sometimes they're acting like they're an extension of the government, and other times they're acting like they're pursuing their own interest. So how do you find these flows? How do you uncover them, Gordon?
Really good. Really good question. And I spent a lot of time on this. And what I've done, or what we've done, is we went to the best in the world. And Richard Duncan commutes between Singapore and Hong Kong, was a consultant to the IMF in Thailand during the Asian crisis, worked at the World Bank, and most recently was the head of investment strategy globally for ABN AMRO in London. Well, we've just London. Richard has the best understanding of how these numbers are put together in all of the countries, what numbers to really look at, how to translate them, and we've worked with Richard to actually put together that whole structure and flows, and on a monthly, quarterly basis to see how they're shifting on a global basis. And it's not just putting the numbers together. You have to know how to translate them in each of the countries. You actually have to know the people who put them together, because otherwise they're open to misinterpretation. Try and look at the Chinese Bank of China's numbers and make sense out of it. You think the Federal Reserve numbers can be complicated. And so it takes that level of expertise. And we put that together with, and by the way, it's a service now available at my site to sign up with, Kerry, for any of the listeners that like to. But it's expensive. I have to tell you that. But it's for the serious investors who really want to who are making serious decisions.
Yeah.
But you have to go to that level. That's why this data is not in the public domain.
Yeah, that's what I gathered. Right.
It's like trying to understand what the shadow banking, $72 trillion of shadow banking consists of. Try and put your hands around that and how it's changing and at what rate it's changing in which of the countries. And there's a one report that comes out, Financial Stability's report of the Bank of International Settlements in Basel, Switzerland, and it comes out sort of quarterly. Really, it's an annual report. And you can pour through it, and at the end of it, you just throw your hands up and say, I can't use anything meaningful here. Yet that's driving the global economy. So you have to skin this onion, and you have to get professionals who understand it. But when you see the data, it's really easy to make decisions. It's real clear what's going on. And you and I are kind of talking about it briefly. Right now, there's very simple kinds of mathematics. We have a deficit that's got to be smaller than the amount of money we're pumping out. And right now, the deficit's about $50 billion a month. $600 billion is what we're going to be in deficit. Well, that number's got to be smaller than what we're printing with quantitative easing, which is $85 billion, and what we're pumping out of the country on a current account, which is negative $45 billion. So right now, we have a $40 billion on one side and $50 billion on the other in terms of what we're spending. That's a liquidity problem. It says there's a shortage there. Now the numbers can be approximate, but it says, how do you do taper? Because that's going to make this problem even bigger. It says taper is not a possibility without a liquidity crisis here. And I may be off, by a couple billion here or there, but the problem is pretty darn clear.
Yeah, it's obvious there's never going to be any tapering. That's what...
Taper is nothing more than trying to talk the markets out of the level of speculation we've got going. It isn't going to happen. Now, Kerry, I need to make a real big point on that. The taper may happen as what we know as quantitative easing because they're in such forced to so much pressure to follow through on that. But don't misinterpret that from still printing or putting that amount of liquidity out. I think they'll put it out in a different form, and we'll have a whole different type of program that really camouflages that all. It's like Operation Twist, for example. And it's my opinion right now, I believe it's probably going to be under student loans with $1 trillion, because between student loans and car loans, it's all government funded. So I have a feeling that it'll be, quantitative education, and it'll be a redirection in government policy, if you would. But really, the essence of it is to continue to increase the flows of money. And we were just talking before the show that you had a Twitter that said that the Federal Bank of Chicago, Evans, was saying they're going to print $1.5 trillion between now and 2015, right?
Yeah, it's going up. They're increasing it
from $1 trillion. So there's my proof. There's what I believe has to happen.
Yeah,
and
because otherwise it's going to collapse.
Exactly. And you look, and if you want some proof, look at Europe right now. Here they had 6 quarters of recession. They're theoretically coming out of the recession. And what are they doing?
Highly theoretically coming out of recession.
Exactly. So they're taking down interest rates, and now they're talking about some version of quantitative easing, some version of it. But basically, they got to put more liquidity in. Their banks have got a bigger problem because of the collapsing growth rates in Central and Eastern Europe, the same as we saw when the Asians started collapsing when we talked about taper back in May. They just went straight downhill when that happened, right?
Mm-hmm.
And so this is the problem, and it goes back to, as I said earlier, collateral. The collateral out there, non-performing loans, the malinvestment, and then when they're being rolled over, if you're lending money and it's rolling over, you're going to give them the same value of that collateral that it was before? You don't think so. You'll say, no, and they can't ante the difference. Mm-hmm. So there's all sorts of games of collateral transformations that are being played to kind of hide this. But at some point, you just run out of runway because you can print money, but money is not capital. Money is an IOU. It's a claim on an asset, okay? And hopefully that you'll get your claim fulfilled. Capital is something that comes out of savings. Capital is a real unencumbered asset. So, the only way you get capital is you got to build it, you got to mine it, or you kind of grow it. You can't print it. Mm-hmm. And so if the economies aren't growing and creating profits and EBITDAs, which is then wealth, you don't have enough capital. And if you've got the debt structures that we currently have that are consuming money just on debt payments, and you're not growing your capital fast enough, which we're not, especially with the world slowing, you run out of problem. And you can pump liquidity, that is dollars, or a currency into the market for a length of time to camouflage it, but eventually the gears just seize up, Kerry. And that's what how much further? I don't know. I think we could get another 18 months here.
Yeah, certainly not much more. I mean, we're getting to the end of the road at some point. I mean, obviously, we've all thought that end of the road was coming many times in the past, and we were wrong. But at some point, it just can't keep going.
Don't ever underestimate what politicians and the governments will do to survive. Again, look at what's going on in Venezuela if you want to know what the future might be here. But do we really need to know? We just need to know that it can't work indefinitely. And so you need to say, okay, if that's the case, I need to start preparing for how I would protect myself. It's like insurance. What do I do? And so I need to buy insurance. And whether it's 6 months or 6 years, it's somewhat irrelevant in reality. You need to figure out how to protect yourself. And I think it's actually the easiest we've ever seen because it's become really clear. I don't even see the governments hiding it anymore. They're straight out that they're even talking about having to increase inflation. Mm-hmm. It used to be you wouldn't dare suggest you wanted to increase inflation. That was bad. But now, for some reason, this is good. And people, the average person says, I don't want inflation. I want prices to go down. And the government said, oh, no, we got to drive the prices up. And doesn't anybody ask you, say, does this make any sense to you? It makes total sense if you understand the economy and what happens when you have deflation. But the average person out there who's unemployed right now is scratching his head, says, I don't get this. And they're right not to. Yeah,
well, it seems to be irrational, but they seem to want to just drive it up and keep the bubble going. And obviously it's all about the banks, right? And keeping their balance sheets growing. And just like that repentant ex-Fed insider said, Husker, that apologizing for QE because it only helped the banks and did nothing for Main Street, right?
Exactly. There was in that one week there were 3 former people involved. Welsh also came out, who was on the Federal Reserve, 3 of them, and all apologizing, or to some degree apologizing, but really showing that quantitative easing did not help the economy. Yeah. It helped the banks. And that's just
like you and I didn't know that already.
but it is what it is. And the important part is not to try. You and I really can't change it dramatically. This is the climate we have to invest in. You have to go find the tools that are going to allow you to work within this. And
exactly.
you and I both had grandfathers, Kerry, I know we've talked about separately, that made a lot of money in the Depression.
Yep.
And so good, don't get this conversation is not to be negative. It's to recognize reality and do something about it.
That's the most important thing. You hit the nail on the head there, Gordon, is recognize reality, what you're up against, and then figure out what you need to do.
And
now,
do something about it.
It isn't necessarily to get rich. Sometimes it's just to survive and get through it intact. Howard Katz, who used to publish a newsletter called The One-Armed Economist, said that, in a depression, which I've always believed that we've been in since '09, that, the person who wins is the person who keeps the most of his wealth intact. Not necessarily makes wealth or expands it, which would be nice if you can, but doesn't lose or loses the least. Because in a depression, the vast majority of people get poorer. And that's obviously what's happened here in the United States and around the world, maybe with the exception of China, but you can't believe the numbers. You don't really know what's happened there. But certainly they haven't gotten poorer, right?
Absolutely right. We're in a silent depression, and you're right, Kerry. We have been since 2007. When you see Walmart, where they're doing food drives for their employees, pardon?
Yeah.
I mean, let's just start.
They're on food stamps.
You're right. And you're right. And their employees are on food stamps. And for Thanksgiving, the company's doing food drives for their employees, contributing right at some of their stores. I mean, this is pretty clear what's going on. And when you see companies declaring earnings, and some of them I read, and they say their problem is inflation's not high enough. In other words, so inflation's been helping the top line here, and they've been playing games on the bottom line. I see, and for those who studied the earnings, they're an unmitigated disaster. Yeah. But frankly, nobody's paying attention to them because it's irrelevant.
The headlines all look good. The Dow propaganda average looks great. So don't worry about it.
Nobody cares about earnings anymore. Look at Twitter. This reminds me of the fall of '99 when nobody cared about earnings until suddenly they cared about them. Yeah. And you're seeing this with the IPOs are coming out. These are warning signals. That doesn't mean that this is eminently going to stop, Kerry. We said earlier, this market have a little bit of correction in here, but you could have a significant run up. But when that happens, you're sitting with a gun to your head. You got to have the tools to say, I got to know when to get out of this party. Mm-hmm. Because otherwise, when markets go down, they go down. You can lose exactly 3 months of gains will disappear in 3 hours or 3 days. That's a fact. I've seen
it happen to me.
Always. So you can say, okay, look, I'm all this. I'm doing really well. But if you don't know when it's time to quietly slip out that side door, it's all for naught. And that's to me. And you said it beautifully, Kerry. This is the chance to save your wealth. There'll be lots of time to make money in the future. Right now, it's to have the right insurance and to protect your store of value of your wealth. And that's the game. But nobody seems to want to think that way. They just want to know how they can make money. Frankly, I'm worried about keeping it.
Yeah, exactly. Return of capital, return of investment rather than return on investment. On that note, Gordon, just give us your sites again, where we find you, how we connect with you.
Thank you very much, Kerry. GordonTLong.com, triggers.ca, and GordonTLong.com at YouTube.
All right. And on that note, Gordon, we'll talk with you again real soon. And go to financialsurvivalnetwork.com. There'll be a link to Gordon's main site. And don't forget, sign up for the newsletter. Gordon, we'll talk with you again soon. Be well.
Pleasure. Have a great Thanksgiving.
Hey, you too.
Summer is almost over, and so far we've really lucked out. No hurricanes. And living in Florida here, I'm extremely grateful, but that could change tomorrow. And look, we're about to celebrate the 1-year anniversary of Superstorm Hurricane Sandy. Do you remember that one? Not very many people in the Mid-Atlantic or the New York area region were prepared for it. But if you had PrepareWise emergency preparedness food, you were ready. If you'd prepared with PrepareWise water and the basics, some currency and a means of self-defense, you weren't caught off guard. And if you weren't prepared then, please learn from it and get prepared now with PrepareWise emergency preparedness food. It always pays to prepare. Go to preparewise.com, use the code Lutz. You'll get great savings
depending on the size of your order, you're going to get a whole lot more. Be prepared. Don't be caught waiting for the government to come and save you. Preparewise.com. Use the code LUTZ, L-U-T-Z. Be prepared.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.